Can we start now? Yeah. Good evening, everyone. I am Ruchi Sangvi, moderator of this webinar. We are delighted to welcome you all in the webinar being organized by Counting Professional Education Committee of ICAI. It is my pleasure to be a moderator for the webinar on FAQs on tax audit under Section 44AB and opportunities and concepts of BRSR for CAs. In a short while, we will start this webinar. I would like to apprise you about CPE committee. The profession of chartered accountancy is growing leaps and bounds, and it is phenomenal growth has brought the profession at the forefront. Today, our profession has acquired an indispensable position in the business and economy. ICAI continuously aims at developing knowledge edge so that the members stand out to the expectations of the society. To achieve this objective, the CPE committee of ICAI has been continuously striving for perfection, integrity, and knowledge, which make the word chartered accountant synonymous with excellence in service. In this direction, CPE committee has always been proactive to the emerging needs of its members, enabling them to acquire contemporary knowledge and skills to face the challenges effectively by organizing CPE programs and providing adequate opportunities. We are pleased to inform that ICAI is organizing its first ever Global Professional Accountants Convention, GLOPAC, on the theme Connecting the Globe, Creating Value from November 24th to 26th at Mahatma Mandir Convention Center, Gandhinagar, Gujarat. GLOPAC is being celebrated as a mega event to display the important role that the accountancy profession has been playing in building stronger and more stable economies around the globe. It would provide an opportunity to the global market to network with the best talents in India. Now we'll see the video regarding the same.
It gives me immense pleasure to announce that the Institute of Chartered Accountants of India has decided to organize its first ever Global Professional Accountants Convention, GLOPAC, on the theme Connecting the Globe, Creating Value on November 24th to 26th, 2023 at the Mahatma Mandir, Gandhinagar in India. GLOPAC is being celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of our country.
Globalization has made the world one village, and the services of chartered accountant are also available globally without any boundaries. The Institute of Chartered Accountants of India is also devoting significant efforts towards global networking. The convention shall be attended by more than 3,000 delegates from around 40 countries. I would like to extend a warm welcome to the fraternity on behalf of ICI to attend and participate in the first ever GLOPAC.
ICAI is geared up to welcome delegates from across the globe at the GloPac.
Now we would welcome Chairman of CPE Committee, C. Purushottam Khandelwal sir. He is Chairman of CPAC, Vice Chairman of Committee for Members in Entrepreneurship and Public Service, and Convener of RBA Directorate of ICAI. He is having 25 years post-qualification experience in the field of audit, direct and indirect tax, and intellectual property rights. This year, he is devoted to fortifying CPE framework and guaranteeing quality across its entire operational spectrum. And this year, major focus would be on upgrading of CPE portal for enhancement of the branding and professional competency of members. CA sir, Purushottam sir, we would like you to share few words regarding the same.
अरे रुचि ये स्क्रीन शेयर हो रही है, इसको बंद करो ना, स्क्रीन को बंद करो ना.
हाँ सर.
स्क्रीन शेयर हो रही है.
Okay sir.
Ruchi, before speaking, I have the Vice Chairman of the CP committee, Gyan Mishra ji here. He's very learned guy. I request Gyan Mishra ji to give his word of wisdom.
So much thank you, Purushottam bhai, very learned speakers of the program, Deepak Bolusaria ji, who will be speaking on other speaker Nilsa ji, who shall be deliberating on very important topic, that is obviously talk of town nowadays, sustainability. And my good friend and of course chairman of the committee, Purushottam Khandelwal bhai, Ajit Tiwari ji, secretary of the committee, Ruchi ji, moderator of the program, and all respected participants. Good afternoon to one and all. Friends, we are really delighted to welcome each and everyone in today's Wednesday this series program. Today, two very important topics are to be discussed. One by Deepak Bolusaria ji, that is tax audit, important and key issues, and the other one, SRSB by Nilsa ji. Friends, since Chairman Sir is here, I'll not take much time. I would like just tell you that the committee's endeavor is to reach to the last person of the profession, whosoever is residing, wheresoever. So we are trying that knowledge updation program should reach to each and every one of the community. And in this series, each and every Wednesday, the 2 hours unstructured learning program is there, and so it is today as well. Friends, we all know that the time has come when we have to take the new challenges and we have to welcome the new opportunities. And in that series, this SRSB is one footstep ahead. So please learn, and I'm sure that tax audit, time is going on. Each and everyone is busy in tax audit. So learning with Deepak ji with respect to the key issues of the tax audit is of utmost importance. So welcome you all once again. And since Chairman Purushottam bhai is here, I'll request him to kindly share his words of wisdom. Thank you, one and all, for listening patiently.
Thank you.
Vice Chairman of CP Committee, my dear friend Gyan Mishra ji, respected faculty Deepak Bolusaria ji and Fenil Shah ji, Secretary of CP Committee Ajit Nath ji, Moderator Ruchi Gala, and respected member those who are doing this event. So every Wednesday, the ICAI CP committee is trying to reach each and every corner of the country where there is no physical faculties available. We are trying to disseminate the knowledge of the topic which is selected by again Mishra ji on the tax audit. So this is very relevant topic because all these members are currently engaged in the tax audit report. And another topic is the sustainability, which is the talk of the town, as Gyan bhai rightly said. This time, we have always committed that we will try to send email at the end of the month that what is the CP you have completed and which CP, how much CP is pending. So we have already committed our fulfill our commitment. Maybe some information may be by mistake wrong. but it's our honest efforts of the Gyan Mishra and Purushottam in my office that we try to aware member that how much CP you have already completed and how much is yet to be completed. So on, they should not be in dark at the end of the December that they are not seen and not views the CP hours. So we have tried our best, and this time we are also bringing with the technology, as Gyanbhai rightly said, but we will not discuss more much because the people is waiting to hear the Deepak ji and Fenil Shah ji. Thank you so much for inviting us on this seminar. Thank you, Ruchi. Thank you.
Thank you, Purushottam Sirji, and thank you, Gnanchand Sirji. C. Gnanchandra Mishra is the Vice Chairman of CP Committee and Chairman Committee
yeah,
on
madam.
Installments.
And now the speaker, Deepak Bhai, you are welcome and please start the deliberation.
Thank you. Yes, sir. Thank you, sir. Thank you, sir. We would be welcoming today's faculty. Yes, sir. Yes. We would be welcoming today's faculty, C. Deepak Sirji. He is a tech-savvy chartered accountant with 24 years of experience. He is currently a member of the Taxation Quality Review Board. He has also been elected as a member executive committee of Sales Tax Bar Association Delhi for the year 23-24. He has spoken at various forums, including national television talk shows, study circles, chambers of commerce, and various branches of ICAI all over the India. We hereby welcome you, sir. Deepak, sir.
Thank you, Ruchi. Should I start?
Yes, sir.
Yes.
Okay, actually, I was waiting for the prompt from Ruchi that whether should I start or not. I thought maybe she has to say something else. So that's why I took a long pause. But I thought that maybe she forgot to tell me that I have to start. Anyway. Good evening, good afternoon, friends. My name is Deepak Bholusaria. Before I start, I would like to acknowledge Purushottam ji, Gyan Mishra ji, Ruchi ji, Ajit ji, and other office bearers of ICI who are working behind the camera or behind the scene. Today's topic is on tax audit. I understand that only a couple of days have left to meet the deadline of 30th of September. And it's a very crucial time for all of us. In fact, when I was approached by CP committee, I was a little apprehensive that only 4 days are left. Then how our professional brothers will spare time to actually attend this webinar? Then I was told that it's a regular feature on Wednesday and a lot of people join on Wednesday. So that's let's give it a go. Since I only have approximately 50 minutes, Ruchi, if I'm not wrong, right, to speak.
Yes,
because
sir.
we have to have question answers also from our audience for the last 10 minutes or maybe more than 10 minutes. In case you have already received any question, you can also let me know, and then I will.
Sure, sir.
Okay. So,
sure, sir, I'll let you.
Because you see, my main purpose is to dispel the issues of our members, to answer their queries rather than I speak from one side only, right? Because ultimately the purpose of this entire webinar at this particular time is to basically resolve the queries rather than I myself telling them what you guys should do or not do. That we could have done 1 month back, right? Anyway, so coming to the topic, even though I know a lot of members might have gone through all these documents, but from my experience, what I have seen, that a lot of members actually doesn't have the knowledge whether these studies have actually been published by the institute or not, because all these 4 documents are the crucial one as far as any tax audit is concerned. Specifically, point number 2, TAQRB study. Around 1.5 years back, Taxation Audit Quality Review Board had issued one publication whereby the most common mistakes we chartered accountants are doing while filing tax audit reports have been observed by TAQRB. They have basically given us the compilation of the most common issues, most common mistakes chartered accountants are committing right now. So my humble suggestion to each and every member is to at least once go through these observation. And interestingly, while giving these observation, TAQRB has also referred to guidance note, even though the guidance note which has been referred to in TAQRB study is the old one, the 2014 edition. But if you look at clauses, the major recommendation in any guidance note is basically the same, right? Parameterically, both are, I mean, in all the guidance note, whether it is 2014, 2022, 2023, it is more or less same. Obviously, there are minor changes, right? So my humble suggestion is to go through each and every recommendation, see whether you are committing that error or mistake or not. If not, well and good. If yes, then take corrective action today itself, rather than repenting in the later in the later part of your professional career, right? So better to जैसे कहते हैं ना कि one stitch at a time can save you from 14 stitches. So it's better that you take the action today itself. Further, if I look at clause number 13 of tax audit report, there is a disclosure which is required for ICDS. Again, it is one of the poorly drafted area or a poorly reported area as far as clause 13 is concerned, because in order to actually conduct or report, conduct audit on clause number 13 and report it accordingly, you need to have detailed study of this particular document, which is called as technical guide on ICDS, right? Because if you look at guidance note, it doesn't deal with each and every guidance, each and every ICDS in detail. It only give you the summarized picture, right? But in order to have a detailed guidance on ICDS, you need to go through this study only. Only then you will be able to justify your tax audit report. Then there is a checklist which is already available on institute's website. Again, if you go to online publication, and within that, if you go to TAQRB subsection, in therein you will find all these study which have been issued by TAQRB, or you can go to direct tax committees part also, wherein you will find guidance note and ICDS computation study. So any tax audit objective, we all know basically the purpose of any tax audit is basically to assist as assessing officer. But we are not merely, please appreciate, we are not merely data gathering agency and just giving that data to tax officer. Not only we have to gather the data, but we have to apply our professional skills also, right? We have to have that kind of professional competency also to actually give the data, because the data has to be the correct data. It has to be the relevant data. You don't have to give the irrelevant data to the assessing officer. So it requires certain skill set also. TAQRB, I may be a little fast because ultimately I have only 15 minutes and there are a lot of issues which we have to
sir, you can continue for more. Fennel sir has told you can continue for a longer period of time.
Okay, thank you.
Yes.
Anyway, a TAQRB, those who have no idea what TAQRB is, so basically the TAQRB has been constituted by Institute of Chartered Accountant to actually review any kind of a test function under any direct tax law or indirect tax law, whether you are signing 44AB, whether you are signing form number 10B, whether you are signing 10BB, or any other certification under direct tax law, or even 99C, even though 99C is no more required to be certified by a chartered accountant or audited by a chartered accountant, but there are a lot of many other certifications are also required under GST law. So any kind of certification, any kind of a test function you are doing under any direct tax or indirect tax law, all these reporting can be reviewed by TAQRB. And if any error or mistake or any limitation is found in those audits, and particularly tax audit, right, then appropriate action can be taken. If you see if let's say error is immaterial, then you may be left scot-free. But let's say the errors or the mistakes are material. In that case, your case may be referred to disciplinary proceeding, disciplinary committee, and then accordingly they will take the action. So thinking that maybe that I am a small practitioner, I only have small clients. So that will not give any leeway to you. Whether you are whether you are a small firm, whether you are a medium firm, whether you are a big firm, whether you are dealing with small client, medium client, bigger clients, it is immaterial altogether. All kinds of audits, all kind of tax audit reports can be reviewed. Obviously, I don't say that 100% of the reports are being reviewed. Obviously, randomly, and there are certain checks and balances are there, basis which audit reports are bigger or tax audits are being picked for review. It can be small tax audit. Applicable or
Recording
not,
in progress.
whether 44AD, in case of 44AD, what should I do? In case of 44ADA, what should I do? And so on and so forth. There are so many confusions just on the basic question on the applicability of section 44AB, right? So the first question which comes in mind is whether tax audit is applicable only to residents or even to non-residents also. Please appreciate 44AB does not discriminate between resident or non-resident. If non-resident is doing any kind of business in India, if the business is being conducted in India, then yes, 44AB is applicable. If let's say resident has a branch outside India, technically speaking, yes, tax audit is required for that branch also. So whether you are a resident, whether you are a non-resident, if you're engaged in business and that business is being conducted from India, yes, tax audit is required. Another confusion, another frequently asked question is on this 10 crore limit, right? If we look at various clauses of section 44AB, there are 5 clauses: 44A, B, C, D, and E. Now, if I look at section 44ABA, if your turnover is more than 1 crore, if your turnover is more than 1 crore, right, then there is a proviso within section 44AB subclause, clause A. Within that, there is a proviso which says, in case your turnover from business, please appreciate it is only business. If your turnover from business is more than 1 crore, then you have to deploy 2 additional checks. First, that 1 crore threshold has to be met. Then you have to deploy 2 additional checks. First, what is your cash receipt vis-a-vis total receipt in a year? Second, what are your cash payments vis-a-vis total payment during the year? Now, on this particular aspect, even there are certain confusions also. Now, if I talk about receipt, the confusion is this receipt only related to sale? The payment, is it only related to expenses? No, my dear friends. When I talk about receipt, because proviso to section 44AB clause A very clearly says all receipt including in relation to sales, because the word is including, right? So which means that not only receipt in relation to sale or receipt from debtor, but apart from that, if there are any kind of other receipts, those have to be included also. So it means if capital has been introduced in the business, that is a receipt. If loan has been borrowed, that is a receipt. If you receive advance from customer, that is a receipt, even though it is related to debtor also. So any kind of receipt, it is part of gross receipt. So out of that gross receipt, you have to see that out of this total receipt during the year, how much is the cash. So the basic documentation which you need to prepare is your cash flow, simple cash flow. Just see how much is the inward cash. And when I say inward cash, it doesn't mean the only cash, it means bank also, right? because when we use cash flow, it includes bank as well as cash. So prepare your cash flow. What are the inward and what are the outwards? So within the inward, how much is the cash portion and how much is the non-cash portion? Now, when I say non-cash portion, it means only those receipts which are through banking channel, through account pay check, through electronic, right, mode. Those are considered as non-cash. If let's say you have received the amount and it is through a check, which is a bearer check, right, which is a bearer check, again, that is also treated as cash only. Cash doesn't mean only hard cash. Cash also includes any non-account pay checks. Please appreciate, just because a check has been crossed and no account pay has been mentioned, it doesn't mean that it is a account pay check. Simple crossing on the check does not make it an account pay check. Please appreciate. Even though obviously, like in case of section 40A3, 269SS, 269T, we always give a disclaimer that SSC doesn't have the requisite proof whether the amount in relation to check has been made through an account pay check or not. So that with that limitation, obviously, you have to see how much is the total receipt, how much is the cash portion, how much is the total payment, how much is the cash portion of total payment. If any of these receipt or payment, if any of these cash portion, is exceeding 5%, is exceeding 5%, in that case, audit is required. But if let's say both receipt as well as payments are less than 5% of the total receipt, in that case, audit is not required till 10 crore. But what if, let's say my turnover is 9 crore, but my total receipt is 15 crore. It's quite possible. My turnover is 10 crore, but my total receipt is 15 crore. It's quite possible that there may be some old outstanding which you have received during the year. Some loan might have you might have received during the year. Some new share capital you might have received during the year. So it is quite possible that even though the turnover is within 10 crore, but receipts are more than 10 crore. Even then, you don't have to see whether this total receipt is more than 10 crore or less than 10 crore or less than 1 crore or more than 1 crore. You just need to compute the total receipt. Within total receipt, you need to compute the cash portion, and that cash portion must be less than 5%. If both the conditions are met, that both cash receipt as well as cash payment is less than 5%, in that case, that 1 crore limit will automatically shall become 10 crore. So in that case, no audit is required. So till 10 crore, you need to test 44AB proviso. Beyond 10 crore, obviously, there is no requirement of testing that condition, and you can proceed with the audit. That I have already explained, that any payment or receipt by a bearer or cross check should be considered as payment or receipt in cash. Now the question is this higher limit available to professionals? Is this higher limit available to professionals? No, sir. This higher limit is not available to professionals. As I explained earlier, that section 44AB A small a is only for businesses, right? And as far as professions are concerned, that is covered by 44AB subclause B, not A, because that proviso is part of A only. There is no such proviso within clause B. So even if your gross receipt from profession is more than 50 lakh, whether it is 74, whether it is 75, still you are required to get your books of accounts audited. I will be covering 44 ADA in the later part of the presentation also, right? So don't worry about that. Very common question being asked, that for the purpose of computation of turnover for section 44AB, do I need to consider GST or not? Do I need to consider GST or not? Now, please appreciate that in the entire income tax law, the expression turnover has not been defined. The expression turnover has not been defined, neither in section 10, I beg your pardon, neither in section 2 nor in section 44AB. Even though there is a reference in section 145 or 145A, but please appreciate then 145 or 145A deals only with income computation. It doesn't deal with computation of turnover. So 145 or 145A might have impact on computation of your income, but it doesn't have any say on the computation of turnover, right? So if I look at guidance note, read with certain case laws, it is well settled that the term sales, turnover, gross receipts have to be interpreted with reference to the items which go into the profit loss account of a concern, and that has to be ascertained based on the method of accounting regularly employed by the SEBI. So in simple words, whether you are following inclusive method or whether you are following exclusive method continuously, obviously, right? So for the last 7 years, you are following inclusive method, or whether you are following exclusive method, it all depends on that, right? Please appreciate that this terminology, turnover or inclusion of GST or exclusion of GST, is only for the limited purpose of deciding whether am I covered by section 44AB or not, whether am I required to get my books of accounts audited or not. That's it. That's it. The moment you have decided, yes, you have breached that threshold based on regular, method of accounting you have regularly employed, that purpose is over. That purpose is over. Then section 145 and 145A shall take over. Then ICDS and so on and so forth, right? Because please appreciate, ICDS are only income computation and disclosure standard. It is these these standards are only for the limited purpose of computation of your income. Second, ICDS are not accounting standard. Again, it's a very misnomer in the minds of chartered accountant, even in the minds of, in the minds of professionals, in the mind of businessmen, that ICDS are accounting standards. No, sir. No, friends. ICDS are not accounting standard. Even though we have seen a lot of books are being prepared according to ICDS, right? Because they don't want to you see, a lot of small entities, they don't want to go into jugglery of first computing the accounting profit, then according to the tax profit. So what they do is basically they simply prepare their books of accounts according to ICDS, right? Or I should say, some of the accounting standards they are following. In some cases, they are following ICDS. The classic example is in case of depreciation. In case of depreciation, in my whole career, if let's say if I am auditing 1,000 audits for small entities, 999 are following ICDS only. Hardly 1 or 2 are actually following the entire accounting standards. Specifically depreciation. And if you are actually following ICDS for the purpose of your books of accounts, then actually you are not following accounting standard. In that case, your liability, being a chartered accountant, has to qualify your report. Please make sure of that also, because you see, again, preparation, framework of financial statement will also come into picture when you are preparing any financial statement. Generally, it is for the these are general purpose statement. When it's a general purpose statement, obviously, accounting standard, provided you are following the accrual method, because if you are not following accrual method, then accounting standard have no role to play. Please appreciate that. If your assessee, if your auditee, if your client is not following accrual method of accounting, then there is no application of accounting standards either. Then the position will change entirely. But if your assessee is following accrual method, it's a general purpose statement, then yes, accounting standards have to be followed. And in any case, any particular accounting standard is not being followed, Obviously, you have to see level 1, level 2, level 3, level 4, right? It depends what kind of entity you are dealing with. If it's a, let's say, and level 4 entity, which generally is, in that case, AS15 is not applicable. I'm giving you an example. AS15 is not applicable. AS20 to some extent is also not applicable, right? So you have to first see what kind of level of entity you are dealing with, what kind of accounting standards are applicable, and accordingly, obviously, you have to qualify your report. But AS10 obviously is applicable to all level of SSCs. I'm not talking about companies. I'm only talking about non-companies, because in case of companies, there are separate set of accounting standards. Those accounting standards have been notified by MCA under company accounting standard rules. So we are not delving into accounting standard. I'm just, since this issue is being raised, we are discussing this issue. That's why I have touched upon this area, because it is again one of the areas which is being not properly dealt with by our fellow professionals, fellow chartered accountants. So that's why I've raised this issue. So coming back to turnover is based entirely on the method of accounting you are regularly followed. So there may be a question that if, let's say, SSC wants to opt for section 44 AD, what it should consider? Should it consider GST, or should it consider, or should it include GST or exclude GST? So again, that call assessee has to take based on how he has been maintaining his records since beginning. It may be possible that earlier he was maintaining books of accounts and he was following exclusive method. Then in a particular year, he would like to opt for 44 AD. In that case, I will suggest him to exclude GST. But again, that call assessee has to take, you guys have to take, because frankly speaking, there is no definition in the entire Income Tax Act whether GST has to be included or excluded. Similarly, there may be certain items which have gone into profit loss account, but which are in the nature of capital asset. Let's say you have sold some asset. So that capital item will not form part of your turnover. Though that kind of income may be reportable in 3CD. There is a particular clause, if I'm not wrong, clause 20, if I'm not wrong, therein also. There may be a loss. Let's say, for example, there is a loss from the sale of capital asset. And since under Income Tax Act, you have to follow block asset concept. So that loss first has to be disallowed. And then according to the method, block method of depreciation under section 32, read with ICDS 5. Sometimes it is also called as ICDS 5 also. According to that, you have to compute the depreciation, or maybe short-term capital loss, or maybe short-term capital gain, as the case may be. So that you need to report. So the turnover, again, there is a famous case of Gromor Export Limited, and it as per courts, meaning should be taken as commercially and commonly understood. Even though in certain, recently there is a case of some ITAT wherein in case of F&O, SSC was following guidance note of our institute, and ITAT said that since there is no turnover defined, the expression turnover has not been defined, so that's why the guidance note of the institute is a good reference as far as F&O is concerned. So again, already our guidance note also says that it all depends how you account for GST. So I will humbly suggest all of our participants to kindly go through the guidance note once. There may be a situation that certain amounts you have written off, right? Again, there is another issue on this particular aspect. Let's say there is a creditor, and that creditor is no longer payable, and that's why you have written it back to the profit loss account. The question comes into mind is whether it is part of gross business receipt or not. In my view, it is not, because it is covered by section 41, even though, right? Again, a question might come as far as this particular aspect is concerned. Is it covered by section 194R? Is it covered by section 194R? Is it a perk? Because if I look at guidance note, even though on one side it says that out-of-pocket expenses are not to be included, reimbursements are not to be included, but at the same time it also says that under section, if any income is taxable under section 194R, it will form part of the gross turnover. Now the question comes into mind is this particular case, in this particular case, since I have written off the right, written back the creditor, is it a perk? Even though it is an income, please appreciate, it is an income. But the question is it a perk? Is it a perk? In my humble view, it is not. In my humble view, it is not. Why? Because you see, it is a trading liability, first. Second, it is specifically covered by section 41. And there are certain judgments which says if a particular item is covered by section 41, it is not covered by section 28, clause 4, Roman 4. There is a fine difference. It is an income under section 28, no doubt about it. Read with section 41, but at the same time, it is not covered by 28.4 in my humble opinion, because it is already covered by section 41. So there may be a dispute on that. But in my view, any amount written back, and it is also specifically written in the guidance note, that is not, it is not part of your gross turnover. Again, if there is a back-to-back, let's say you have a separate reimbursement account, you are making some expenses on behalf of your client, you have debited that account, and then you are receiving that amount from client, even though you might have charged GST on that, please appreciate, unless and until there is a margin inbuilt in that. Let's say you have spent 100 and you have recovered 110, then it's a different story altogether. But let's say you have spent 100 and at the same time you have recovered 100 from client. You have recovered 100 from client with GST, 100 plus GST. Then as per guidance note, since it's a back-to-back transaction, no amount to be included in gross turnover. But again, at the same time, there is a conflict. There is a conflict within the 44, the new guidance note, because that new guidance note refers to section 194R. And obviously, in this particular case, there may be applicability of section 194R also. You see, there may be a situation, though, again, there are judgments also, old judgments also, where it says that in this particular case, it's not an income, right? Because if I look at circular of our CBDT, it's a very interesting circular. It says that if, let's say, you are taking any reimbursement from your client wherein the invoice is in the name of the client, then it's not covered by section 194. But if the invoice is in the name of professional itself, then it is covered by the section 194R, right? In both the scenarios, just because the name of the client is mentioned on the invoice, it is not a reimbursement. But if the name of the client is not mentioned, then it is a reimbursement. So there is a conflict within the circular also. But at the same time, we all know that circular is not law. It is not binding on courts, right? It is not binding on assessees also, though it is binding on AOs, though they are bound to follow it. But as far as assessees are concerned, they are not bound. So you need to take your call on this, whether you have to follow, whether it's part of 194, whether it's covered by 194R or not. Because again, within the guidance note, again, there is a conflict. It doesn't give us exact guidance whether it is whether this particular aspect is covered by 194R or not. Because this particular slide which you are seeing right now, it is part of the old guidance note also. I know it's a little confusing. Should I include it or should I exclude it? So you need to take the call. So you need to apply your mind. You need to take help of certain judgments also. In my view, if it is pure reimbursement, it is not part of my gross turnover. Please appreciate, we are dealing with computation of turnover only. We are not dealing with whether it is income or not. These are two different aspects. An item may be income, but it is not part of turnover. Say, for example, I have interest income. Is it part of your turnover? No. So you need to take your call according to that. So within the guidance note also, these items have been mentioned, what to include and what to exclude. So if you are giving discounts as a trade discount, obviously it shall not form part of your gross turnover. It has to be reduced. Sale return, it needs to be reduced, right? If cash discount, unless and until you're giving the cash discount on the invoice itself, it's only a financing arrangement, basically. So it need not be excluded, right? So please go through these line items which have been given in the guidance note itself. Ruchi, have we received any question till now on turnover? If you have any
No,
question.
sir. No, sir.
Okay,
We haven't
okay.
received any
So how many
questions. And
participants are
sir,
live right now?
approx 500 participants are there.
Okay, great. Another question on turnover. If I am a partner in a particular firm and I am receiving remuneration from that partnership firm, am I liable to audit? Is it a business? Is it a profession? I am covered by 44AD. I'm covered by 44AD. There are so many questions on this particular question. One question is giving birth to so many questions, right? So that question has been settled by various judgments, and a very recent judgment which has also been mentioned in our guidance note. It is of Perizad Zorabia Irani, right? In 2022, Bombay High Court had said that under Section 28, Clause V, any interest, salary, bonus, commission, or whatever number called due to or received by partner from such shall be chargeable under the head profit or gains or profession. Please appreciate again the one we were discussing a few minutes back, that an item may be an income, but it may not be turnover. Same thing Bombay High Court is saying, that yes, it is an income taxable under Section 28, subclause V, but at the same time, it is not a turnover. Since it is not a turnover, 44AB has no applicability. Since it's not a turnover, 44AD has no applicability. Since it's not a turnover, 44ADA also has no applicability, even though it is income. So if you thought that, okay, I'm receiving, let's say, 40 lakh of remuneration from my partnership firm, I'm a chartered accountant, I'm receiving this 40 lakh of remuneration from my chartered accountant firm, I'm into profession, let's disclose 50% and pay tax on that. No, sir. No, sir. You have no shelter available under Section 44 ADA, or for that matter, 44 AD. So you need to disclose entire amount as your income under Section 28, subclause V.
Sir, few questions have came. Can we go through them now, or?
Please, if these are related to turnover, please.
Proprietor doing business takes loan from private parties in business bank account, and from this a residential house is purchased. Are these receipts and payments to be considered while calculating total receipts and total payments?
So let me understand the question. Let me understand the question once again.
Proprietor is doing business.
There are business books, or let's say there is a current account, right? In that current account, there is an inward amount of loan taken from bank, right? Is it so?
Yes, sir.
Okay.
Yes.
And that amount has been used for construction of house.
Yes, purchase of a residential house.
For purchase of residential house, right? Please appreciate, since this is again my opinion. Again, this particular situation has many issues inbuilt, right? So let's take one by one. First question is whether it is to be treated as a receipt or not. Now, very interesting situation is that since this receipt has appeared in my current account, of business books, or in other words, this receipt has appeared in my business books. So in my humble opinion, yes, that receipt needs to be considered for the purpose of section 44AB proviso to section 44AB A, right? At the same time, you have spent that amount on construction of your personal, obviously, house. And I also believe that all these transactions shall be routed through the capital account, right? Obviously, since you are constructing personal house, you won't be showing that in your business balance sheet, or maybe you are showing the business balance sheet. Both the situations can be there. Still, that doesn't change the fact it is a receipt, it is recorded in your business books. There is a payment, it is recorded in your business books. So, for the limited purpose, please appreciate for the limited. I also welcome Fanil Shaji, who has just joined. So, only for the limited purpose of computing the gross receipt under section 44AB proviso. Yes, it is a receipt and it is a payment. Now, very interesting consequence of this position. If let's say you are paying interest, for that loan, since that loan has been used for your personal usage, please note that you won't get any deduction under section 36 for construction of house, though you may be eligible for under section 23-24, but as far as section 36 is concerned, you cannot claim any deduction for interest paid on this loan. So you need to consider that. So before jumping in an aggressive tax position, you must take into account all this situation. Next question, Ruchi, please. Ruchi, are you there?
Yes, sir. Yes, sir. There is remuneration received by partner from CA firm is more than 50 lakhs. Whether tax audit is applicable to the partner.
I have just explained this question. Please see this situation. Simply replace 1.2 crore in this slide with 60 lakh or whatever amount it is there. Whether you are receiving 10 lakh, whether you are receiving 40 lakh, whether you are receiving 70 lakh, it is not a turnover. When it is not a turnover, where is the question of audit? Please appreciate, for audit, the prerequisite is turnover. There has to be a turnover. When there is no turnover, where is the question of audit? So no audit is required. Yes, please.
It is not related to turnover, but the company has applied to ROC for extension of AGM by 3 months. The audited financials are not ready by 30th September. Whether Form 3CA CD certified based on unaudited financials of company?
No. In that case, Form 3CB is required. 3CB is required. Please appreciate. You see, this question actually has come a little earlier, but in any case, I can answer it right away. When I talk about 3CA versus 3CB, when I talk about Form 3CA in particular, it says when there are accounts available which have been audited under any other law. Please appreciate the accounts which you have received in your hands have not been audited under any other law, because till the time that balance sheet or those financials are adopted in AGM, audit is not completed. In that case, Form 3CA will go out of the picture and Form 3CB shall come into the picture. In that case, my dear friend, the responsibility shall fall on your shoulders to conduct financial audit also. Because if I look at Form 3CB, there are actually two audits. One is the audit of financial statement and one is the audit of your 3CD. For financial statement, we write true and fair in 3CB, and for 3CD, we write true and correct. So in your case particularly, since accounts have not been adopted, no such accounts are available. In that case, Form 3CB shall be applicable. Obviously, you have to, when you are conducting financial audit, all the accounting standard, everything you have to follow. A. B. There may be a situation that the financial year of the company is also different. Maybe company's financial year is from 1st January to 31st of December. Why? Because it's a subsidiary of a limited company, I mean, a company listed outside of India. Again, in this particular case, stat audited accounts are not available because the accounts which are available is for the period 1st January to 31st December. But for income tax, you need to have audited accounts from 1st of April to 31st of March. Again, Form 3CB shall be applicable. Another example, company has recently been incorporated, let's say on 15th of January. So company has adopted its first financial year from 15th January to 31st of March 2024, for example. Again, audit under Company Act shall be conducted from 15th January to 31st March 2024. There is no audited balance sheet available for 1st of April 2020. I mean 15th of January to 31st of March 2023. If let's say there is a turnover more than 1 crore or tax audit is applicable, in that case, actually 3 audits shall be conducted. One, under income tax from 15th of January to 31st March 2023, 3CB. Next year, from 1st of April to 31st March 2024, 3CB. And third audit under Company Act from 15th January to 31st of March 2024. So this example can be extended to other situations also, right? Next question, Ruchi, please.
In the case of builders, advance received from builders to be reported even the same against registered agreement and debit note issues against amount received based on completion.
Please,
or only receipts. Shall I repeat it?
Please repeat
Yes.
question. So what I've understood is, in case of a builder is selling flats, right? And that builder has received some advances. Right?
Yes, sir.
Okay. Please continue the question.
Okay. I'll go through the entire question again. In the case of builders, advance received from builders to be reported even the same against registered agreement and debit note issued against amount received based on completion or on the basis of receipts by the customer.
Sir, you see, actually your one question has multiple questions, frankly speaking. First and foremost, advances, when I say advances, it means advances only. Because when I say advances, it means there are no dues outstanding against that customer. Please appreciate. If let's say I've already sold you some house, then what shall I do? I will do customer account debit to sale account, right? When I raise this invoice and I received payment after that, then it's no more an advance. It's a receipt against my receivable. But I have received the advance, then I have raised invoice, then it's an advance. So all kind of advances needs to be reported first of all, right? Again, I have to see what kind of advance is this, correct? If it is advance, it is against immovable property I'm building because it's a builder, right? So it is reportable under section 269 SS, in my opinion. I believe this is the question, Ruchi, right?
Yes, sir. Yes, sir.
Next question, please.
Second question. In revenue sharing, in the case of builders, if any amendment is expected in the estimated cost, then same to be reported in notes of tax audit. Estimated costs to be recorded in books may be interest or professional fees.
I did not get the question.
In revenue sharing, in the case of builders, if any amendment is there in the estimated cost, then the same should be reported in notes of tax audit. Estimated cost to be recorded.
Which note to tax audit he is talking about?
Sir, he has.
So I believe question is little vague. I will suggest.
Yes.
So Ruchi, we can do one thing. You can share my email ID, and I will suggest that gentleman or lady, whosoever it may be, to send me an email with all the facts, right? With detailed facts. Obviously, there may be some counter from questions from my side also. Then I will answer this question because I am not able to understand all the facts here clearly.
Yes, sir. Sir, the next question is the detailed explanation on clause 44.
Clause 44.
Which,
Okay, I will cover that. Any other question? That is not a question. That is a request.
yeah, yes.
Any other question?
Yes, no, sir. All
No.
questions
Okay.
are covered.
Let's.
Yes, sir. A few new questions have came.
Hmm.
Will incentive received in the nature of foreign trips on which TDS is deducted under section 194 are be included in turnover of the SSC?
I have already explained that if I look at guidance note, it very clearly says that any perk under section which has been taxed under section 194R to be included as part of gross turnover, first of all. Second, my conflict with guidance note was in respect to reimbursement only. That in case of reimbursement, on one side it is being said that it is not part of turnover, but at the same time they are saying that 194R needs to be considered. But your case is a different case altogether, right? Having said that, then yes, it needs to be included as part of turnover. First. Second, now the question comes into mind is because you see it has many ramifications. First, is it needs to be included in turnover or not? Yes, it needs to be included in turnover. Second, is it required to be included in my income or not? Yes, since it is taxable under section 28 clause 4, it needs to be included in your income. Third, even though it has been included in my income, can I claim expenditure? Now the situation will be complicated. Since if I look at circular, it says, let's say companies giving conferences, there is a conference. In that conference, company needs to segregate that conference cost into two parts. One part is official and one part is personal. For official part, you need not deduct any TDS under section 194R. But for personal, you need to deduct under section 194R. So, since in your particular case, TDS has been deducted under section 194R, I'm saying and I'm assuming and I believe it will stand that it is your personal income only, even though I'm in the sense that expenditure is in relation to your personal usage. So in my humble opinion, though it will form part of your income, but you cannot claim any deduction. So that will complicate situation. Turnover, yes, it will be inflated because of 194. In particular case of yours, 194R. Income, yes. Deduction, I don't think so. Yes, please.
Whether tax audit is applicable in Khadi institution?
If I look at guidance note also, right, it very clearly says even if your income is exempt under section 12A or 11 or so and so forth, but if you are engaged in any business activity, you are required to get your books of accounts audited. And I believe Khadi Bhandar is nothing, it's a business only. Even though ultimately the tax might not be levied because of certain exemptions, but yes, 44AB is required.
Next question is regarding turnover, sir. In case of travel agents, they charge their client a consolidated amount of rupees 5,000 in an invoice, out of which rupees 4,800 is towards the ticket, which was charged to the agent by the airline and balance 200. Yes,
I got the question. Let's say ticket price is 51,000. Your commission is of only 200 rupee. Now there are two ways to raise the bill. One is that you write on the face of the invoices, ticket cost being paid to airline is 51,000 rupee. My commission is 100 rupee or 1,000 rupee only. 50,000, 1,000 plus 1,000 is equal to 52,000, right? This is one way of writing the invoice. If you are raising the invoice in such a manner, obviously, that 51,000 has to be 51,000 only. Please appreciate. Please appreciate. Then only 1,000 needs to be considered as part of your turnover. Obviously, how you prepare your profit loss account is also important, because in that case, only 1,000 shall go into your profit loss account, not the entire 52,000. But if you are raising the invoice, ticket cost 52,000 with no breakup given, how much is the ticket cost, how much is your charges, right? In that case, entire 52,000 shall become part of your turnover. And this example, the similar example has been given in the guidance note also.
Sir, now we can go for explanations on clause 44.
Clause 44. Okay, let's see. I have okay, please appreciate again, you see time was less. Yes, you can revise the tax audit report also, but before 31st of March 2024, this is the last deadline to revise your tax audit report for this particular assessment year. Don't forget for UDIN. Okay, let me see whether I have considered clause 41. There must be. Okay, 44 is not here. Let me pull out another presentation. Give me 2 minutes, please. I have another presentation. I can. Okay. Yes, I do have. Ruchi, is it visible?
Yes, sir.
Okay. So, last request for the day, clause 44. So first, let's look at what clause 44 actually requires us to, right? This is a screenshot from the new guidance note only. Clause number 82, breakup of total expenditure of entities registered or not under GST. Please look at the title itself. Breakup of total expenditure of entities registered or not under GST. Now the question comes into mind is, which entities we are talking about, whether these are registered or not registered. What if I am the entity whose tax audit is being conducted by, let's say, Deepak Bolusaria. He is the auditor of a particular XYZ company. And that XYZ company is not registered under GST. Is this clause 44 applicable for that company or not? Question comes into mind. The answer is yes. Answer is yes. It is immaterial whether the auditee is registered under GST or not. Why? Because we are not talking about outward supplies. We are only talking about inward supplies. And for inward supply, we need to test whether we are taking these inward supplies from entities registered under GST or not. Please appreciate. First, this is clear. Let's say I am a pure investment company, Ruchi. I am a pure investment company. I only buy shares and I only sell shares, right? Since shares are not goods, it is not a supply. Since it is not a supply, no GST is leviable, right? Since no GST is leviable, I am not required to get myself registered. But at the same time, to conduct my business of investment, of purchase and sale of shares and securities, I also need so many services. I also need so many inputs from other vendors who may be registered under GST, who may not be registered under GST, right? So in that case, it is applicable to me. First, this is the first principle. Yes, 44 is applicable to everyone, right? Second thing. Now, how do I write in 2, 3, 4, 5, and 6 and 7? Second thing, you need to understand that you need not give expense line item wise disclosure for clause 44. Though for computation, for present, I mean, for ultimate figure, you need to prepare some kind of working also. Because what I do is, particularly, I'm talking about myself only. Let's say there are 50 line items within the profit loss account. What I do is, I start with the profit loss account, take each and every line item, or I start with the trial balance. I take each and every item, and in this particular manner, I keep on figuring out how much is the amount I need to disclose in clause 3, clause 4, clause 5, clause 6, and clause 7. And ultimately, once all these items are computed, I make a total. Though I'm saying that I start with profit loss account, but this clause 44 is not restricted to profit loss account only. Because there may be many supplies, which have been capitalized, So even then, it is a supply, it is an inward supply. It doesn't mean, because when we are talking about total expenditure, expenditure means capital expenditure as well as revenue expenditure. Second. Third, only those inward items needs to be reported which are supply under GST. For example, I told you that I am into the business of purchase of securities, right? Purchase and sale of securities. Security is not a good. That is why it is not a supply. Since it's not a supply, no amount is required to be reported in this clause, particular clause 44. So if let's say I start with profit loss account, in purchase, there are, let's say, in purchase, I have booked purchase of securities. So even though it's part of total expenditure, but for clause 3, 4, 5, 6, and 7, it shall become 0. So no amount needs to be reported. Clause 2 is different from clause 3. Clause 2 means any kind of expenditure, you just total it out, right? But when I talk about 3, 4, 5, 6, and 7, only line items, only those expenditures which are in the nature of supply needs to be considered. Say, for example, salary. Salary again is not a supply. Though it shall form part of 2, but it shall not form part of 3, 4, 5, 6, or 7. Please appreciate that. So there may be a difference between 2 and 3 because of this only. So these are certain principles. Again, all these principles are mentioned in the guidance note itself. Third, this reporting is qua PAN, not GST. I told you in the very beginning, whether you are registered under GST or not, it is immaterial. Whether you have 10 registration under GST, it is immaterial. What is material is your profit loss account of the entire entity. Because there may be a situation that one GSTN has made certain supplies to another GSTN within the entity itself. So when you are preparing that profit loss account, those items will get knocked off and will get out of the picture. So it is qua PAN only, not GSTN, right? Para 82.3 of the guidance note, of the new guidance note, very clearly says only expenses which are within the ambit of supply needs to be reported. Petrol, no tax is levied. But is it a supply or not? It is a supply. Please appreciate. Though it is a non-taxable supply, but it is a supply. Right? Alcohol for human consumption, it is not a supply. Securities, since it's not a good, it is not a supply. Right? So you first need to understand taxability comes into later part, whether it is taxable or whether it is not taxable, whether it is exempt or not. First, you need to understand whether it is a supply or not. Obviously, you have to have some kind of knowledge of GST also, right? Then, clause 4, applicable even if you are registered or unregistered. I have already explained this, right? Then you need to segregate whether it is from registered, unregistered. Now there may be a situation. That assessee has not maintained relevant record. Why? Because it is not mandated under any law. No GST law requires that you need to maintain your books or your records according to clause 44. Neither Income Tax Act says you need to maintain your books of accounts or records according to clause 44. In that case, what should I do? In that case, you can give a disclaimer if information is not available or the readily available with you. I will give you the disclaimer, what kind of disclaimers you guys can give. But try to prepare as much as information which is available from the record, right? So if I look at para number 82.2, 82.3, 82.17, depreciation, it is not expenditure, so it need not be included in clause 2 also. It is not an expense itself, it's an allowance. Salary is an expenditure, depreciation is not an expenditure, right? 82.17, both revenue and capital expenditure is covered. I have already explained this. Then petroleum, it is a exempt supply. It is an exempt supply. It is a supply. Interest paid to bank, it is a supply, but exempt supply. Interest paid to, let's say, let's say you have borrowed money from director of the company. Let's say, for example, you have borrowed the money from director of the company, and on that money you have paid interest. Now, director may be registered, director may be unregistered. Generally, it is unregistered. So in that case, it is an exempt supply, though it is an exempt supply, but it needs to be reported in this particular column. Let me go through. So it needs to be reported in clause number 7, expenditure related to entities not registered under GST. So as far as unregistered entities are concerned, supplies from unregistered vendors are concerned, life is very simple. You need not delve into whether it is an exempt supply. You just need to see that it is a supply, but whether it is exempt supply, non-exempt, so on and so forth. Simply put it everything there. But when it comes to situation of supplies from registered vendors, then life is little complicated. But in that case, prepare the information as possible based on the records available with the SSC and accordingly give the disclosure at the end of the report. Also, again, since time is so simply, if I take example, if expenditure is 120, then exclude depreciation, balance 100, then with the balance, you need to segregate what is registered, what is unregistered, and so on and so forth. And this is the sample note which you guys can give in your tax audit report. Obviously, you have to modify this disclosure according to the situation. So with this, my clause 44, I have tried to summarize within the time frame. So with this, I believe my time is over. Thank you, Ruchi. If any other questions are there, I would like to take it.
No, sir. Thanks a lot, sir. And on behalf of all the members present over here, we would like to thank you, sir, for giving your important time and enlightening us with this deep knowledge, which is very relevant for the month of September. Thank you, sir.
Thank you. Thank you, Ruchi. Thank you.
Thank you. We would be welcoming CA Fennel Shah, sir, for our second session. Welcome, sir. CA Fennel Shah has specialization in the field of corporate overseas bookkeeping, accounting, taxation, finance, and real estate transactions. He recently had a global world record in G20 Jan Bhagidari Summit at New Delhi. He is a member in Sustainability Reporting Standard Board, ICAI New Delhi for financial year 23-24. He is awarded with Philanthropist Icon of the Year for Social Work Awards at the Indian Icon Awards 2021 organized by National Human Rights Organization. CA Fennel Shah, sir.
Sorry to interrupt you guys. Ruchi, can I take leave?
Yes, sir.
Thank you. Thank you so much. And welcome, Vanil, again. Thank you.
Thank you, Deepakji. Thank you. Ruchi, is my screen visible?
Yes, sir, it's visible.
Okay, and completely audible, right?
Yes, sir, yes, sir.
Okay, okay. Thank you, first of all, to Ruchi for wonderful moderating the whole session, and that too on the day of tax audit. And I can say that also would like to thank the CPC committee of the ICAI for giving me this opportunity to deliberate and discuss my opinions and my views with respect to, you can say, the opportunities which are coming in the times to come, and also right now in business responsibility and sustainability reporting. Friends, at the outset, before I start my discussion, I would like to thank CA Purushottam Khandelwal, the chairman of CPC committee, and CA Gyanchand Mitra, the Vice Chairman of CPC Committee, and all others in the CPC board for making this session look the sun of the day and giving me an opportunity to discuss with respect to the, you can say, the BRSR. Just a let us try to first understand from the audits, apart from the work of GST, right? Apart from various accounting work we do, maybe at the national level or at the international level in count of outsourcing, the new emerging opportunity which is coming for all of us is the sustainability reporting. And if you want to develop this as a practice, then yes, this 40-45 minutes discussion will be going to help you up. But let me first give a small disclaimer that in this session, what is my main agenda is to try to make you abreast of first various concepts which are associated with, you can say, sustainability reporting. Number two, to give you the brief that what all kind of developments has happened, is happening, and what are expected in the times to come. The third important is what kind of business reporting, business responsibility, sustainable reporting is happening in the times to come. And after listening to this, if you are interested, and after listening to this, if you are interested in the particular arena of BRSR, then how you can move ahead with the same. So that is the ultimate. At the end, I'll try to dwell upon that if you want to venture into this particular field, then what kind of, you can say, skills you should possess, what kind of degrees or qualifications you can take so that you can also venture into this field of business responsibility and sustainability reporting. Ruchi, just want to ask you that, am I visible? Means my video is on, means visible?
Yes, sir, it is visible.
Okay, it is visible. Okay, fine. So friends, first, let us try to develop the mindset for this particular new field which has came, and that is with respect to, you can say, the sustainability reporting. Friends, till now, whenever we were doing any kind of work of audit for a corporate, our ultimate focus was individual interests. Individual interests here, I mean to say, of the proprietor who is associated with the proprietorship firm, or of the partners who are associated with the partnership firm, or just the stakeholders, the shareholders of the company. But friends, someone named Garrett Hardin very rightly said that if individuals act independently, rationally, but their focus is only on pursuing their individual interests against the common interest of community and planet, then they will exhaust the planet's natural resources. And yes, you can say the cost of individual success will be the cost which the planet. So that's where something provoking came, that yes, we need to do something that the personal progress or the individual progress does not harm so drastically to the planet's natural resources. Moreover, is sustainable development of what we are talking of, or sustainability we are talking of, can be achieved by one or two? Then the answer is no. For that, someone very rightly said that a collective, comprehensive, concrete efforts are needed to be done. And somewhere it was rightly said that if every office worker who worked in UK uses one less staple pin a day, and instead of using that staple pin, they uses the reusable paper clip, then you can say that nearly 120 tons of steel would be saved in 1 year. This is I just quoted here to make you aware that if small, but concrete, comprehensive, and collective efforts, if done, then surely we can move in the right direction, which the government of India, not only government of India, but United Nations want, that we should move towards the sustainable planet, towards the profitable and towards the people-oriented planet. So, by this, I would like
Excuse me, sir.
to say
Sir,
that
you're not audible properly.
before we start with the actual session, that till now, our work. Just a second. And is my video also visible? Just a second. Yeah. Okay. Okay, fine. So I can say that till now, our ultimate focus when we are doing any kind of audit was related to, you can say, the processes, the performance, and the profits, not with respect to anything else. But if you want to develop yourself into this sustainability reporting, then yes, your focus should remain on profit, not at all an issue. But apart from profit, that profit should not be person oriented or should not be personal, but those profit should be equitable. That is, you can see on the screen, that should be justifiable to people at large, to community at large. That is, our profit should be able to deal with various social variables such as community, the education of them, the social resources, focusing on health, well-being, and quality of life. So if you want to have a sustainability mindset, then your profit, apart from personal, should also help people. And that's where the center green color concept triangle comes, that is of equitable. Moreover, your profit should be viable from planet perspective. That is, you should try to use the environmental resources in a very justifiable manner, in a way that you conserve those resources and in a way that you don't damage those resources to the higher extent. So your profit should be viable to planet. Third perspective is the planet and people should act in such a way that people do not become overburdened on planet. And that's where the three term comes, that be equitable, be viable, and be bearable. And that's what you say, be sustainable. So if you are able to if you are able to justify this particular three things, that is, come out of the brackets of just profits, just performance, and just processes, but focus along with this three on profit, which is people oriented, on profits, which is viable for planet, then you can say that you have developed a mindset which is needed for sustainability reporting, the thing which we are going to discuss today. Now, just before I move ahead, the technical team, now is everything perfectly audible?
Yes, sir, it is.
Okay, thank you. So that's where, friends, you can say that earlier the ICI was known for excellence, independence, and integrity. But now ICAI has also added one more feather to it, one more quality to it, and that is sustainability. And you can say that SEBI is spearheading in sustainable transformation of India and is also taking a step ahead as a precedent in setting the global standards. And along with that, you can say that ICAI is giving hand-on-hand support to SEBI by developing whatever is needed in the field of sustainability. So friends, this is a very emerging opportunity which is coming in the times to come. Now friends, what is the agenda of today's session? Then we will be having a discussion on what is ESG. Then we will try to understand various concepts which are connected with this particular new opportunity in brief. Then I'll tell you what is BRSR, that is business responsibility, sustainability reporting. Then I'll tell you in brief that earlier we were doing business responsibility reporting, and now from that BRR, we are shifted to BRSR. So what is that? Then we will have a deep dive into BRSR. I'll give you a brief, if time permits, on social stock exchange, the opportunities which are coming. And very important, lastly, I'll tell you that if you are interested in this particular field, which are the skills which you need to hone yourself and what are the qualifications you can take so that you can also swim into this ocean of opportunities which is to come and which has came indeed and which is to come more in the times to come. Let's move on. Friends, when you want to understand this particular opportunity, it's very important you understand what is BRR, what is United Nations Sustainable Development Goals, what we mean to say by sustainable development, what we mean to say by sustainable reporting, what is net zero, what is climate change, what is BRSR. So let's take a half of minute on each of this first to have a base for this particular session. Friends, the whole base of BRSR has came and has emerged from the Sustainable Development Goals of the United Nations. That is, you can say, and we all know that there are 17 Sustainable Development Goals, SDGs, of United Nations. And India is one of the country which has adopted or which has taken an oath to adopt this 17 Sustainable Development Goals, which is focusing mainly on eradication of poverty and hunger, providing good education, promoting gender equality, doing steps for good health and well-being, water and sanitation, affordable and clean energy, and likewise, all these 17 goals are there. And you can just understand that United Nations member states adopted all these 17 goals in 2015. And they called for a call of action that let's become totally positive on all these SDGs by 2030. And to promote that, and in order to have a sustainable understanding of this, there is also UNDP, that is United Nations Development Agency, which is implementing these goals in all the countries and all the territories of those countries in a better manner. And we can say that India is one of the 193 countries who signed the Sustainable Development Goals. From these Sustainable Development Goals, in order to promote that, we went for BRR, then we shifted to BRSR. That I'm discussing in the times to come. So first we tried to understand that the base of today's session, one of the base of today's session is what? BRSR. Now, second important is, what is we mean to say by sustainability? What sustainability is? Then in very simple terms, you can say that when you progress personally, but along with your personal progress, you take society together, you take environment together, that's where you can say the sustainable growth will be achieved. So in basic terms, we can say that sustainable development is developing yourself in such a way that you meet your present needs. आप आपकी अभी की जरूरतों को पूरा करो without compromising or by lesser compromising the ability of the future generations to meet their own needs. That is, you focus on the present, not by damaging the future or by affecting the resources of future in the lesser sense. And friends, understand that it has been seen that normally when we talk of sustainability, people have a myth that they focus just and just on natural resources. But friends, it is not so. Apart from natural resources, we also need social resources. We also need economic resources. So this is the second important term. First, you need to remember 17 Sustainable Development Goals of United Nations. And India is also one of the part of those signing countries. Second, sustainability का simple सा मतलब क्या है? अभी के प्रोग्रेस को इस तरीके से करो जिससे भविष्य को उतना अफेक्ट ना हो. Third, we are not focusing just on natural resources, but we are also focusing on social and economic resources. So friends, you can say that अगर कोई भी कॉर्पोरेट सस्टेनेबल डेवलपमेंट करना चाहता है तो उसे खुद की प्रॉस्पेरिटी तो देखनी है, but he has to ensure peace, he has to ensure the overall growth of people, it has to ensure that it implements its agenda which acts in a partnership way with everyone, and ultimately we shall ensure that there is very less damage to our mother planet. So sustainable development focuses on prosperity, peace, partnership, cohesiveness, people, and lastly, planet. This is what we understand by sustainable development. Friends, so you can say that the production, cost, and revenue function becomes the smallest part. Above there is people, beyond there is community, and ultimately everything revolves for the planet. This is the base understanding which you should have. Moreover, when you try to understand this BRSR, there is a concept of carbon neutral, or you say net carbon. What is the meaning of that? Then you can see on the screen, for example, if I'm doing much emission, then what is to be carbon neutral? Then you can say two things are very important in order to become carbon neutral. That is, first, reduce the emissions. Now, you cannot make your carbon emission totally zero, but from 100, you try to bring to 20, 30. And along with that, carbon neutral does not always mean just to eliminate the carbon emissions. It is not always 100% possible. But apart from that, you try to have such other energy development projects like windmill or generating energy from water, so that you generate the energy by eliminating less emissions. So what is carbon neutral, or what is to make a company carbon neutral? Then to reach to zero carbon emission, that's the ultimate focus. But presently in short run, reduce the emissions, and second, supplement the generation of energy by carbon neutral ways. That is by creating less carbon emission. That is what you mean to say by carbon neutral. One more important concept is ESG. One of the base for BRSR is Sustainable Development Goals, and another base of BRSR is this ESG. What is ESG? It stands for Environment, Society, and Governance. What is environmental? Whenever a company does anything, see to it what impact it is creating on the world, on the environment, and on the natural resources. So your main focus revolves around the climate change, the greenhouse gas emissions, the efforts by which the natural resource is depleting, the wastage, the pollution, the emission of hazardous materials, all these things. So you try to see to it that the corporate entity operates in a way so that the negative impact on the environmental world takes place at the minimal level. What's social? Then your organization should flourish in a way that it supports, it promotes, it uplifts the society. The working condition improves. The local communities are impacted in a positive way. It promotes health and safety. The employees and human rights are at the topmost priority. And last is G, governance. That is how you conduct yourself in the regulatory fronts. That is, you be best possible as far as tax payments are concerned. You don't be the part of bribery, collection, political lobbying, donations, etc. That is what the governance is. So ESG is basically to make the corporate entity work, which is environment friendly, which is socially supportive, and which is governance wise the best. That is what ESG is. So you can say that 3 things to remember till now to understand ahead further is the sustainable development goals. Another is the carbon neutral concept. And the third is the ESG. These 3 things you need to remember. Now, friends, just giving a brief of, not that important, that how the international history or what is a global scenario, then I can say that this environmental reporting concept started since 1980. Then the GRI came, along with that the Carbon Disclosure Project, along with that the United Nations Global Compact Board, the Sustainability Consortium, the IRF, and many other things came. But this was just for a brief background. Mainly we need to see on India. Then the initiative for this sustainable or corporate compliances or ESG started in 2009 when MCA introduced the guidelines on CSR, which were to be complied on a voluntary basis. Then in 2011, before the introduction of New Companies Act, the United Nations Human Rights Council adopted the UNGPs, which India also endorsed. Then after endorsing that in 2011, in July, the next month, the Ministry of Corporate Affairs came up with, again, the voluntary guidelines with respect to social, environmental, and economic responsibilities of businesses. Then in 2012, that is again in the arena of the old Companies Act, SEBI mandated the top 100 listed companies. And bear in mind, friends, whenever you're talking any top listed companies, needless to say, it is from the perspective of the market capitalization. And so in 2012, SEBI made it compulsory for the top 100 listed companies to give their BRR through the listing agreement. And then, friends, finally, when the New Companies Act came in 2013, MCA introduced Section 135 in detail for corporate social responsibility. Then, moving ahead, in 2015, SEBI extended the requirement of filing BRR, which was in 2012 for top 100 listed companies, and it was extended to 500 top listed companies from financial year 15-16. That's how the journey started. And in business responsibility reporting, the main focus was on profits and on governance. But later on, government realized that apart from, you can say, just the business responsibility reporting, there is a need that we add the sustainability grounds, we add the grounds of environmental protection to this particular reporting. And as you can see on the screen, friends, from 2015, the SEBI BRR guidelines. Then came the IRDAI, that is insurance sector, coming up with mandatory implementation of stewardship code. From that's where the SEBI came up with integrated reporting for top 500 listed companies. From that's where the SEBI came up with the securities disclosures, right, for those entities which used the proceeds of green debt securities. Then SEBI came up for mutual funds and alternative investment funds for mandatory implementation of the SEBI stewardship code. And at last, in 2020, the MCA set up a committee for BRR, and then the Sustainability Reporting Standards Board. And we have SRSP, which I am talking, and I'm proudly also the part of that SRSP of this year of ICAI. And then in 2021, SEBI MCA came up with the BRSR, which we are going to start now. That is Business Responsibility Sustainability Reporting. And presently, you can say that it is mandatory for the top 1,000 listed companies to give their BRSR disclosures from financial year 22-23. So this was, friends, you can say, the brief of how we shifted, how we reached to BRR, and from how BRR we came to BRSR. So basically, you can say that why we shifted from BRR, Business Responsibility Reporting, to Business Responsibility Sustainability Reporting. Why we added this sustainability? Then it was because we were facing the global challenges like climate change, the environmental changes, the growing inequality. So Government of India thought that we should promote the sustainable growth, and that's how we should achieve the environmental, social, and good governance objective. And that's why we shifted from BRR to BRSR. Now again, friends, now when we deep dive into this sustainability, remember the 17 SDGs, zero carbon company or carbon neutral company. Third, ESG. And one more thing, that when we talk of sustainability, it is not only on minimizing or preventing the negative issues like lesser pollution, lesser greenhouse gas emissions. No. Minimizing or preventive negative effect is one phase or one side of sustainability. But sustainability, on another hand, is also focusing on good future, that is trying to enhance the positive impacts of the particular organization, that is developing much more sustainable products, new and new production methods, innovative services in such a way that we create a good sustainable future. So bear in mind that sustainability does not only mean that we try to reduce the negative impact, but it also aims at creating the positive environment for the times to come. Now, friends, Sustainable Development Goals came into picture in 2015, 2015, by the United Nations. So what India did, in March 2019, India came out with NGRBC. You can see on the screens, friends, what is NGRBC? National Guidelines on Responsible Business Conduct. So SDGs are of United Nations. And in alignment to it, India in 2019 came up with NGRBC. And the present version of BRSR of SEBI is in alignment with NGRBC. So now here the point comes, okay, wait. Before we move to BRSR, what is NGRBC? So just try to have an overview, friends. NGRBC is a set of principles. Basically, it is a set of 9 different principles which the business should follow for a responsible business conduct. Each principle is having the set of requirements, the set of actions to be taken. But friends, we are not going to discuss each of them in detail. And friends, the beauty of this 9 principles is such that each principle is interdependent and interrelated in such a way that they are not divisible. Means if you try to make a breach of any one principle, obviously your rest principles compliances will be imbalanced. And that's what the other side is. If you focus on all 9 principles together, your business will grow holistically. So there are 9 NGRBC principles. In brief, which are those principles? Then the first principle is focusing on ethics, transparency, and accountability. And it says that business should conduct and govern themselves in such a way that the integrity is promoted. Second, they try to say that we should provide goods and services in a manner which is not only safe, but is also sustainable. The businesses should operate for the well-being of all the employees. Fourth, the business should be responsive and should work in the interest of all the stakeholders. The businesses should promote human rights. The business should ensure environmental protection. The next, the business should engage in influencing public and regulatory policy. Next, the business should focus on inclusive growth and equitable development. And the last, should revolve and provide value to their customers. So basically, the 9 principles focus on qualities and integrity, sustainability, employees, stakeholders, human rights, environment, public policy, equitable development, and customers. So from those 17 SDGs of United Nations, India come up with 9 principles of NGRBC, which are interrelated to, you can say, SDGs. And based on India's NGRBC, SEBI came up with BRSR. So friends, understand how the journey started. 2 things were there, SDGs and ESG. From that, India came up with NGRBC. And based on NGRBC, SEBI came up with BRSR framework. Now, friends, try to understand that BRSR framework is having 2 approaches or 2 versions of it. One is the core BRSR, the overall comprehensive BRSR, and another is the BRSR light version. Comprehensive version has been developed for the top 1,000 listed companies. And in the times to come, it may also extend to certain unlisted companies, which will meet the thresholds of turnover and or paid up capital criteria, which government will introduce soon. So that is the comprehensive BRSR. And the BRSR Lite, the abridged version, the relaxed version, is again for sustainability reporting, but it will encourage on a non-mandatory basis to small companies and other entities other than corporates to also go for voluntary disclosures. So mainly, BRSR is having 2 things. One is the approach and another is the guideline documents or guidance document. And the approach is of two types. One is holistic, broad, wider, comprehensive approach for top 1,000 listed companies presently. Then top-down approach to several unlisted companies. And another is BRSR Light, which is on voluntary basis for unlisted companies and non-corporate entities. Now, friends, currently you can say that, as I told you earlier also, that from those 1,000, means till now, 1,000 listed companies were required to prepare and give BRR. But from now onwards, you can say that those 1,000 listed companies are now required to give the BRSR format, right? And that too comprehensive format. Now, when I'm talking of the BRSR format, right, then what that BRSR format is, then it is made up of 3 sections. Again, friends, a small brief. We were on SDGs, Sustainable Development Goals, and ESG. From that, we developed NGRDC. Based on that, we developed BRSR, and we shifted from BRR to BRSR. BRSR are of 2 types. The bigger version, the comprehensive format, and the small version, the light format. Comprehensive format and light format are made up of 3 sections: general disclosure, management and processes, and principle-wise performance. Now, friends, when you focus on this, for a chartered accountant, section A and section B are a bit easy. But what is much more challenging, or which requires much more depth understanding, is section C, which is principle-wise performance. But before that, let us just go into small. That section A talks about the size, location, products, a basic information about the organization. Section B talks about the policies and procedures. Main comes is section C, which talks about the principles, the 9 principles, which we talked about, the NGRBCs. And friends, those principles are bifurcated into 2 categories. Means you are required to do the reporting of indicators on 2 sides. One is essential indicators, which are compulsory for all companies, and another is leadership indicators, which are voluntary in nature. Friends, we are not deep diving into all these indicators because that is too technical. ये sessions आपको overview आना चाहिए, right? And ये जब आप करते हो sustainability reporting, do you understand that in sustainability reporting, sustainable information needs to be given, and sustainable information includes financial and non-financial elements. Financial elements are directly connected with the accounting system, but non-financial information is the core which you need to understand in this particular arena of opportunities. You say, sir, what is this? Then let me give you an example. If we talk of energy, then the expense, what you do on transportation or electricity, expenditure, that is financial side. But what is non-financial side? By doing that particular energy expenditure, how much carbon dioxide was created, then it is non-financial. When you're talking of waste, what is the disposal cost of waste is financial. But how much of the tons of waste is there? From where it is collected? How much waste is recyclable waste? That all, when you see, it is non-financial information. The bills of water usage is financial. But how the water was consumed, that is non-financial information. So friends, I can say that financial information, the information in sustainability will be financial and non-financial. Non-financial can be quantitative or qualitative. Quantitative means, as we talked of how much tons or units was created, and qualitative is whether governance is perfect, what is the reputation of organization, what is the organization's impact on the state of biodiversity. That all is covered in qualitative aspect. So for sustainability to be measurable and reportable, the performance indicator, both for qualitative non-financial information and quantitative non-financial information, to be adopted. So friends, this is what I wanted to tell you in brief. So if I try to give a gist of you, then earlier there was BRR, Business Responsibility Reporting. But when United Nations adopted SDGs, India was a part of it. The importance of ESG started improving. Then BRR shifted to BRSR. The base of BRSR is not SDGs, but it is something related to SDGs, that is National Guidelines on Responsible Business Conduct. And that's how we came up with from BRR to BRSR. BRSR has two models and one guideline. From that two models, one is comprehensive and another is light. And you form to any model, there are three sections: Section A, Section B, Section C. And in Section C, you have mandatory indicators and you have voluntary indicators. Now to go towards the end of this particular session, friends, by listening to this much, I can say that whatever I shared with you is a tip of an iceberg, even lesser than that. But you can say that if you want to develop one new area of practice, then what kind of skills or qualities you need to have is, you need to understand the non-financial reporting. You should have a mindset shift. What is mindset shift? That I told you that apart from just processes and performance and profit, you should add to profit the planet and people approach. You should understand the valuation concepts. You should understand various technical environmental parameters, like what is carbon neutral company, net zero emission, what is carbon dioxide savage, greenhouse effect, and all those stuff. If you are not having this knowledge, then you should network with these technical professionals. Your presentation skills should improve, because in this BRSR, presentation is at most. You should be having a grip on Microsoft Excel and other statistical tools. And very important is, when you take any assignment of BRSR, the data collection starts from day one, the accumulation of that, to collate that, and then to present it. So your data management skills needs to be at the highest peak. So friends, if you're interested in this field, then I can say that you should focus on developing this particular skills. And lastly, I can say that, just a minute. Lastly, I can say that if by listening to all this, if you got interest in this particular field of sustainability, then you can do two things. One is, if you want to serve only to corporate entities, then in that case, just a minute. If you want to serve to corporate entities, then in that case, you can do the certificate course on business reporting, responsibility, sustainable reporting of our own ICEI. Right? There is a certificate course which runs online, right, on weekends in the morning, ranging from 3 to 4 weeks. You can do the same. That will help you a lot, and you can do the BRSR of the corporate entities. And if you want to serve also the NGOs, for the NGOs to get themselves listed on social stock exchange. It's again a separate, you can say, a session needed, a wide area of expertise needed in that. So if you want to also serve to stock exchanges by getting the NGOs listed on that, then you can also pass the examination of social auditor conducted by NISM. It's again, there you need to go and give on the various centers which are there in each cities. And once you qualify that examination, then you need to apply to the Social Auditors Institute of India, that is of our own ICEI, and they will give you the degree of social auditor. So if you become a social auditor, then you can also serve the NGOs to foster themselves. Because if NGOs gets fostered, they will ultimately help the corporates to move into the direction of sustainability reporting. So two areas are there which you can explore if you're interested in this particular terminologies which I discussed. That is, the very first is, you can say, the certificate course of BRSR by ICEI. You can go on Digital Learning Hub. One batch is already going on right now. The next will soon come. And the second is you can appear as a social auditor in the field of NGOs, right, by passing the exam of NASM. So friends, this was something from my side to give you brief. Friends, I didn't went into the technical aspects because वो इतने छोटे समय में समझना बहुत difficult था. But I just tried to give you the brief of how this field has came and what is presently going on in very brief. So this was from my side, and thank you the team and the CPC committee for giving me an opportunity to discuss on this particular concept of BRSR. Thank you.
Thank you, sir, for imparting your valuable knowledge on this. I'm sure it will create an ocean of opportunities for the practicing CAs. Thank you, sir.
Thank you. Thanks a lot.
Yes, sir. Thank you, sir.
Recording stopped.